Hello and welcome to our training today. This is David Miles. I am the senior coach and principal of Cash from Options LLC. I've also posted our web address up there. Let me give you a little bit of my background. Some of you already know, but I've been trading stock options basically for well over 25 years. Can't even remember exactly when I started, but long time ago. I went through the ups and downs of teaching myself. It cost me a lot of money. I'd make it, I'd lose it. I think I felt I would get a breakthrough. Tried it for a while, it worked, and it didn't work, and it was just frustrating. But I finally made it. I knew there was a way, and there is a way. And I want to share that with my coaching clients. Today, we are going to talk about being relaxed because you know if you're in a bull or a bear market, or at least you know with a high degree of probability. And there's a picture of me being all relaxed because I'm not worrying about the market. I have my indicators that tell me what to do, and so I don't have to think, I don't have to guess. Just follow my indicators that I've spent many years developing. Well, how do we know when we're in a bull or a bear market to a high degree of probability? Let's bring up a chart. This is the Standard & Poor's 500. And this goes back 20 years. It's a 20-year chart set to weekly, and that's important. 20 years or however long you want it, but you want a weekly chart. This is the Standard & Poor's 500. It's made up of 500 large blue chip companies, and it's really the best broad indicator of what the market is doing. These lines on the chart, the red line is a 30-day moving average, simple moving average. And the blue line is a simple moving average, 65-day. So we have a red 30-day and a blue 65-day. Now, when does this signal a bull and a bear market? And again, this is very simple, but it can be very accurate. Let's look at this red line. We're in a bull market here. We've been in a bull market for a while. Now, when the red line breaks below the blue line, that signals a bear market is beginning. So we would go to cash if we had a long-term buy and hold strategy, and if we were a trader, we would maybe get some leaps, put options, out a year or so, and down it goes. The red line will often act as, especially in the beginning, as a resistance line. The 30-day will act as a resistance line, and the blue line will also act as a resistance line. So we can stay in these markets until we get this crossover again right here. And here we jump back into stocks. We buy leaps if we want to invest in long-term options, but we are long the market because this indicates a bull market. And sure enough, and you see the blue line acting as support. That's the 65-day moving average. And everything is just hunky-dory. And this is 2008. February of 2008. And the lines crossed. This is usually the first sign that something's going to be coming up. The trend is going to be changing when it breaks down below the 65-day moving average. So we would have got out of the market in January of 2008. And we would have missed all of this fun and excitement. Now again, I love these crashes because I'm short term, and this is what I teach my clients and through my coaching programs. But you're out of the market, and then here Warren Buffett is saying, we need to buy now, and people say, well, he must be crazy, he's getting old because you can't buy a market like this. Well, what would let you know and bring some peace of mind to yourself by relying on this indicator? Okay, here's the start of a bull market, and up it goes. Now we have a false signal, and this is the first false signal this is given in over 20 years. But let's say it crosses over here, so you get out of the market. You go to cash, and then it comes back up here, crosses over, indicating we're back in the bull, and it bounces off the 65-day. You get back into stocks. You weren't hurt. You missed a little bit of the uptrend, not much. Same thing here. Breaks through the excuse me, 65-day, and that's kind of a warning sign. Then it crosses over here, comes down, and then we move up to here. So we would, get out here, get back in here. Not hurt at all if you're just going to blindly follow this indicator. Now this is present day. Here's the false signal, and when it broke back above the 65-day, the 30-day broke above the blue 65-day, it really sent us off on a trip. Then it came up here. The moving average is held as support. We see a nice double top, and down it comes. This looks like maybe we'll be in trouble here. We have some support here. I've drawn on the chart, and it broke it convincingly. Are we out of stocks? No, because this hasn't changed. Now you see how volatile the market's getting. So much going on in the world right now with trade and the government shutdown, and on and on and on. Problems in Italy and just Brexit, and markets become very volatile. On a daily basis, it'll go up and down. We're not bothered by that, especially in the short term. We take very high probability short-term trades, swing trades. And, I watch, obviously my wife has a 401k that I keep my eye on, and she's still long because of this indicator here. Now, if this comes back up, turns this red line back up, we could be in for another move. I don't anticipate that, making new highs, but again, I don't know. But the indicators will keep me enlightened. Let me, don't want to do that. Here's my website, and it's, there's the address, it's cashfromoptions.com, and here's some contact information. Now, what I offer free of charge, and again, my goal in life, my mission statement is to empower traders to make money consistently. Probably in the neighborhood of 84% or more aren't able to do that. It's hard to compete with the big boys. We teach clients how to compete with the big boys. But if you want to receive my free actual trades, and I'll send it to your inbox every week, but it's free. And it shows you why I made the trade, when I got in, when I got out. We do weekly spread trades. We do what we call directional trades. We're looking for the high probability trades. So if you want to look over my shoulder and see how I trade, just click the contact us and put the email, fill out your information, just name and email address, and put in my trade examples or newsletter, and I'll get you on the list, and I'll send that out every week. We have a lot of good information here. We have coaching programs, and there they are. Questions asked, commonly asked questions. It gives information on my trading strategy, which I've developed over the years, and it gives you probabilities. We trade only when the probabilities are in our favor. And then we have resources here. You can there's articles on other indicators that I use. There's my trade examples, trading library. Has good information that you're welcome to go on there and look at and download. Support and resistance, candlesticks, how options work, and more. So anyway, hope you enjoyed this little video today. I try to keep them about 10 minutes. So I encourage you to go to my website and sign up for the free newsletter. And there's information about coaching, etc., that you may find helpful. So best of luck in your trading. Watch out for the market out there. It was up today, then it was down. It's the way it's been for a while. So again, thanks for coming, and hopefully we will get together again soon. Thank you.